We met a few years ago. You had the hospitality to have me in your office in Jakarta. I flew down from Hong Kong and we had a lovely conversation. It's always great for the Chief North Asia correspondent to get down to one of my favorite parts of the world, and that is, of course, Southeast Asia. And what a success story, of course, the Indonesian economy has been against obvious global headwinds right now. And you also kindly spoke with Bloomberg in October. You talked about a hurricane of different stresses and risks to the global economy, and that's going to impact emerging economies, even one that is producing GDP growth in excess of 5%. You're doing well. Yes. But I'm not here as a cheerleader. I'm here to ask the tough questions, right? So
I'll take the opportunity to cheer everybody up.
Absolutely. I mean, what do you think are going to be the biggest risks? Let's start with a big umbrella question. Given, of course, there is the specter of inflation, a rising inflation here. Your central bank has raised by, I believe, 125 basis points. More rate hikes are possibly in the cards. What are the biggest risks right now from your assessment, from your position as the Minister of Finance for Indonesia?
Well, we are all very much aware that the global economic situation post-pandemic, or even it is not yet post-pandemic, it's actually creating a quite complex environment for us to respond. First, the pandemic required us to do an extraordinary policy, fiscal, monetary, all over the world. And that have the consequences, because then you have the supply disruption because of the pandemic nature of treatment, in this case, in which the mobility of people as well as economic activity will be hampered by the pandemic. And then we have the geopolitical situation, the war in Ukraine, that's even creating a more complex supply disruption. That's created inflation, high, especially from food, fertilizer, energy prices, and that's pushed the inflation up, requiring especially monetary policy to respond even more, in this case, after their extraordinary policy due to the pandemic. So that complexity is the one in which all countries, including Indonesia in this case, facing with the situation in which your policy space shrinking, both fiscal and monetary, because of what you have done for the pandemic using your extraordinary measures. And now you are facing with a much more complex of high inflation that is followed by a very steep increase of the interest rate, especially from advanced country. That's make the currency, especially US dollar, becoming very, very strong. That complexity is creating what we recall like 2008, 2009, in which the volatility index increased, exchange rate weakening, interest rate up, inflation up, and that's definitely can have a potential effect on the stability of the financial side. That is the biggest now in our position of how we are going to manage this complexity, while we are at the same time have to navigate and continue promoting recovery. Indonesia is actually quite good in terms of, you mentioned 5.7, only above 5%, 5.72 actually.
5.7.
So it's close to 6 rather than
quarter over quarter.
Exactly. That is really quite impressive, but you can see that the cycle of recovery that the Indonesia is a little bit late than the advanced country that put us in a much more advantaged position. When all countries declining, especially because of the steep increase in the interest rate and high inflation, which is eroding their domestic demand, then we are still in a position of a very strong recovery. So for us, we have to respond. First, on the fiscal side, of course, this is under my authority. We have to make sure that our fiscal is going to be strong enough to be able to now facing with a different kind of threat, or we call it perfect storm. The pandemic, geopolitical, climate change, technology, and now the monetary and financial upheaval or volatility because of the situation. I think these are all becoming what we want to protect in terms of the recovery process of the Indonesia economy. Our fiscal side is now anticipating that this is going to happen. That's why we are actually committing to consolidate our fiscal in order for us to be able to then being able to respond to this new challenge, which is actually happening today.
Well, government spending actually came down in the second quarter. It came up a little bit, but still contracted year over year.
Correct.
In the third quarter. To weather the downside, do you see more fiscal spending, more stimulus?
Well, if you look at the more detail on the government spending, the declining of the government spending is because last year, the second and the third quarter, our spending, especially on social safety net and for the pandemic-related spending, is hugely increased.
So base effects there.
Yes,
yeah.
because you have the Delta variant last year, in which we suddenly have to close again, and we provide additional social safety net. So this is just because of high base, especially for last year. But the regular spending of the government, especially for the infrastructure, other human capital spending like education, I think they are still actually growing. And we still have the last quarter this year in which there is a chance for all the ministries to catching up on their spending.
I love it when the audience comes up with a very pointed question right from the start. Can you see that? I like to get the audience involved. Should the Fed be responsible for exporting inflation globally?
Well, like it or not, as an open economy, and if your size is relatively small to the big size of the economy as well as advanced country, what is actually adopted by the Fed policy is definitely have spillover all over the world. So when they have, of course, at the G20, we talk about recover together, recover stronger. Early of this year, we actually committed to say that both exit policy on fiscal and especially monetary policy should be well calibrated, well planned. Of course, you said that well calibrated, that's true. Well planned is a little bit ambitious in a way that no one can really control a lot of things. So in this case, the Federal Reserve, seeing the inflation up, they were thinking at that time it was temporary because it is supply disruption in nature post-pandemic, and then accelerated by the conflict. Then the inflation is stubbornly high because of course, the expansion of the monetary policy since 2008, 2009, and then accelerated again during the pandemic situation. So I think this is going to be like creating a huge response from the Fed by increasing interest rate in such a very high speed. Yeah. So the word well planned is not there, yeah. Right? Well calibrated, then they have to calibrate because of the challenge. So with that, I think the consequence for all over the world is just very clear. You like it or not, dollar is still the biggest denominated transaction in the world. So the stronger dollar definitely will create weaker local currency, and that's creating what you call it imported inflation. But that's not the only culprit in this situation. You also know that the inflation is not only coming from the strong dollar, it is because of the food and energy prices, right. Indeed increase.
Well, let me give you some great numbers for you guys. Yes, inflation I think is near a 7-year high. And we've had those 125 basis point rates by the Bank of Indonesia. I guess they're meeting next week as well, possibly more hikes there. Private consumption, which accounts for more than half of domestic output, rose 5.4% in the third quarter after 5.5% in the second quarter. Middle and upper class consumption has strengthened. Commodities exports, which you alluded to, continued to boom. FDI surged to a record last quarter. That's all the good side. But can the Indonesian growth story withstand more rate hikes from the Bank of Indonesia?
Well, before I answer that question first, if you look at the Indonesia inflation, as you just mentioned earlier, you look and dissect it into the element of the factors contributing to the inflation. It's actually quite interesting to see Indonesia first. When we respond to the increasing food and energy price, of course, the choice is just, are you going to like just pass through this huge increase because of the global environment, Ukraine war, food, because of the both fertilizer as well as the increasing hampering the export of the grain from Ukraine, as well as the energy price because of the sanction. So you see the steep increase of the price. Choice is whether you just allow that to pass through, then weaken your domestic demand. Definitely, by increasing the prices, it definitely is going to erode the purchasing power. Government of Indonesia choose to protect the domestic demand. Have the consequence on our fiscal side, our subsidy increased significantly. like the fuel subsidy, it's more than triple. And that's the policy choice. Of course, then you can see that household demand is still increased. But then at some point, we have to make also another choice. Do we have to absorb all the shock, or we should actually pass this one? So we decided last September, increasing the fuel price by 30%. We expect at that time the inflation is going to up by 6.8%. That is our initial exercise based on what is the cycle of the increase first round and second round. What is happening, our inflation is only increased to 5.9% and now in 5.7%. Deflation happened in September and October. Why? Because the food price increased. Why Indonesia were able to do that? Because the coordination between central government under even President Jokowi looking now in the inflation in a very detail, up to the governor, up to the all local government. So that's actually what I call it when I discuss with many of the central bank during the G20 meeting in Washington. I said, if you guys from the monetary policy increase the interest rate because you have to do it, that is like you are using the wide spectrum antibiotic. It's going to like affect the whole body of the economy. Yeah. But if the source of the inflation in the supply side, you cannot just using the interest rate up to actually dampen your inflation. You really have to look at the supply side. That's exactly what the Indonesia is doing. So that is good. And you can see the consumption is still very strong on the third quarter. Middle upper household income is actually doing a very, very strong in supporting this recovery process.
On the fiscal front, is there room, because given that there are some headwinds, is there room to maybe delay the reimposition of the 3% budget deficit to GDP?
No, we've already approved with the parliament discussion on our budget 2023 last end of September, and we are committed to reduce the fiscal deficit to 2.84%. And that is really based on the assumption which is quite carefully calibrated. We definitely also not fully blind that the global environment is going to be very, very dynamic. So we have to always continue prepare for any eventuality. If you look about the commodity price, it could be like increase very steep and then going down. We have it with our CPO, that is palm oil. We go up to 1,700 and then go down to 700. Coal in this case, traditionally is only around $100 and now it's going up to 400 and then going up a little bit. So we see that this kind of volatility on commodity need to be managed carefully by us. But the momentum of growth still need to be maintained, and I think we can do that.
Globally, what do you think, as Indonesia, the chair of the G20 this year, what do you hope will come of the G20 meeting? If there are significant risks, if we go into global recession in 2023, we have to find ways to mitigate the risks, of course, of sovereign debt risks and possibilities, but also, as you've been alluding to, the food and energy crisis. What do you hope can come of G20, or is it just going to be a talk fest and no action?
Well, we actually taking this presidency with the hope that after 2.5 years of the pandemic, we are going to be able to recover together, recover stronger. That's not just a theme. It is the theme in which we are trying to create a collaboration among the G20 and even beyond. Why? Because first, post-pandemic, we also see that the scarring effect and exit strategy need to be designed carefully. But then we are facing with this food and energy price. That's why in this meeting, the first session is going to talk about the global economy and food and energy prices. Don't forget that the pandemic is still actually creating a huge cost for the global economy. We should learn from that. And that's why on this leaders meeting, again, we are talking about the health issue on the pandemic, how globally we can prepare better. And we've already also established the pandemic fund or financial intermediary facility, which can create and support many countries to prepare better for the pandemic. Third, we are talking about climate change, sustainability. It is now on the COP27 in Egypt, and we are going to continue support commitment of reducing the CO2, whether from the energy transition mechanism, whether you are talking about how to deliver your nationally determined contribution. I think this is going to be very important, and leaders is going to have a commitment on that. And the last one is about the digital economy and inclusion. I think you are all agree, and today we are talking about crypto's situation. and then all the digital technology that can create an opportunity but also disruption. So how we are going to make sure that we are going to be able to use this digital technology in a much more positive way, including on financial inclusion. So these are all is going to be the area that the leaders is going to talk. It's not going to talk, then there is a commitment. There is a deliverable, especially on the finance and central bank governor track, which we discussed quite a lot of technical issue, including the debt issue on many emerging and low-income country, which is definitely is going to be something that need to be addressed, because with the trend of the interest rate high, some country which very limited fiscal space, they are going to face with a very, very difficult situation.
Well, I was learning through the Bloomberg terminal this morning that perhaps this green funding plan that President Jokowi has been kind of pitching to some of the more wealthy nations is perhaps coming through. We haven't gotten complete confirmation. Upwards of $15 billion US, maybe $20 billion from the US, Japan, and others to sign this deal to help Indonesia begin its transition on its over-reliance on coal. I know you're not the energy minister. This is not necessarily part of your portfolio, but still, as finance minister, how important is this transition to lessen the dependence on coal?
Well, I will
economically and climate change-wise?
No, I will correct you. The role of the Ministry of Finance is actually very important. You cannot design the transition mechanism because you know that the dimension of this transition hugely on the fiscal side. Whether you are going to incentivize or you are going to subsidize implication in terms of the public spending, that is really huge. That's why we're working very closely with the Minister of Energy as well as coordinating Minister of Investment and Maritime, which is in charge for all designing this energy transition mechanism. President Jokowi has already announced in the COP26, that is last year, that we are going to do the energy transition, retiring coal earlier. And then even in this case, we've already designed with the PLN, that is electricity company, to identify which power plant which is going to be retired, how much it costs, what does it mean in terms of fiscal side, PLN balance sheet, as well as the private sector, especially if this is belong to the IPP, that is the independent power purchase, private sector owned. And then we also discuss about what does it mean if we are going to introduce like carbon tax, how we are going to introduce even carbon market in Indonesia, which is not yet exist. What I'm saying is that Indonesia doing a lot of very serious and credible work in order for us to be able to deliver this commitment. And of course, with all the rich country, which is also asking Indonesia, because we are the biggest also the coal producer in the world, and that's why they're asking, without Indonesia participation, it's going to be impossible to deliver this global commitment. So it's really like the just affordable in which the participation of who's actually polluting the world should also pay. I think it's really exactly what we are trying to achieve here. So I'm glad next week, I'm not going to spoil because this is really our leaders level is going to announce this kind of commitment, which I do hope the size is going to be big enough to create confidence in terms of delivering the transition of the energy.
I was digging for a Bloomberg scoop here.
Yeah.
Let's stay on that theme. The audience is asking, what's needed to fulfill Indonesia's EV dream? Everyone wants to get into electric vehicles. Can Indonesia as well?
Well, it is. First, Indonesia is a big country with a growing middle upper class household. So this is going to be a big market domestically. But also we know that the commitment globally with this climate change, there will be a trend that for transportation vehicle, they are going to go to this electric vehicle. So the question is who's going to produce what in this case? And Indonesia will position very well in not only providing the investment climate, our CEO of this sponsor to this saying that please invest to Indonesia. And we are not just telling you to invest because I don't think you are going to invest by this kind of seminar, but we are going to like provide you with the real investment climate. If you are on the industrial complex, what is the incentive being need by the investors for the electric vehicle? So this is not just offering Indonesia own market, domestic market, but also in terms of the investment to Indonesia. And that can create a huge external balance for Indonesia that for us to be able to withstand this global upheaval as of today. For Indonesia own domestic, we actually use our fiscal tools in order for us to convert into electric vehicle market. So we now taxing not based on, in the past it is taxing based on the big of the machine, that is the CC. The bigger we consider as a luxury car, then you have to pay higher tax. Today, we actually taxing based on the CO2 emission.
Right.
So the less you are emit, then you are going to be less tax for your vehicle. And that will definitely change the behavior of the people in Indonesia.
I have such a long list of questions. We could go for hours, I think, here, and I think the audience would love it. But I want to end our half-hour session here with a question that will dovetail nicely to our next conversation, and that is about banking and payments. And I understand a number of Southeast Asian nations are at least putting together a proposal, if they didn't sign it in ASEAN, essentially coming up with payments and settlements through QR codes, like essentially, in some cases, bypassing the dependence of settlement in US dollars. How important is that?
It is very important, I think, for all countries as well as the region to actually look at the alternative way also. I think the war in Ukraine and the sanction to Russia will provide a very valuable lesson. But also, factually, many countries feel that they actually can do the transaction directly, bilaterally, using their both local currency, which is, I think, is good for the world to have a much more balanced, what you call it, using of the currency and payment system, which is, I think, the initiative by Bank Indonesia to have this collaboration with some ASEAN countries is really good. I think we are very much support on that. It also can increase more digitalization on our payment system internally within Indonesia, but also within regionally, it's going to provide more resilience. So I'm very much strongly support, as well as commending the central bank initiative with many of the ASEAN countries to do that.
I'm like the high-speed train that they're building out of Jakarta. I always arrive on time. 10 seconds left. Final words. I'd like to give my interview subjects the last word. Is anything else you want to say to all the people streaming this and also in the
Well, Indonesia is always like formulating policy based on our assessment how the global is going to affect us, but also identifying our own source of growth. So we try to always combine our policy instrument, fiscally, monetary, and structural policy. We did and we continue doing a lot of structural reform, which is, I think, provide Indonesia with a good investment climate. We are currently talking with the parliament regarding the financial sector reform, which is, I think, is going to be one of the most building block for our reform. So a lot of homework has been done, good monetary and fiscal policy, sound fiscal as well as monetary framework, stability at the macro level, political level, and a very credible policy. So where else in the world you are going to find a good place to invest? It's Indonesia.
Yeah.